Okay, well, we've got earnings. We are on an earnings treadmill. Lots of numbers. IRFC, first up. Rima.
Indeed, and they've reported a good Q3. The company managed to achieve its full-year sanctions guidance of 60,000 crore rupees, and they managed to do that just in the first 9 months of this fiscal year. Manoj Kumar Dubey, Chairman and Managing Director of the company, will now join in, and what we'd like to discuss with him is that now what is the disbursement target for FY26, the outlook and trajectory on net interest margins and the opportunities beyond Indian Railways. Mr. Dubey, thank you very much for joining in. Let me begin with the new guidance on sanctions. Now that you've managed to achieve your full year guidance, what can you end FY26 with in terms of sanctions and even on disbursements? Can you share a number?
So good morning, Rima. So we have come out with good numbers as expected. We embarked on our 2.0 journey, that is diversification journey. We started sometime in the March last year. And this 3 quarters have really been gratifying for the company for the fact that we could live up to the expectations and the kind of guidance and the target that we set for ourselves. As you mentioned, by the end of Q3, we have already crossed the mark that we set for ourselves in terms of sanction of assets. So obviously, anything which comes in Q4 is going to be more than what we had given the guidance. Giving a number, I mean, now that we are not thinking of giving any numbers, but rest be assured that since we are looking into B2B kind of system where our ticket size is not less than 5,000 crore for one of the assets, so going forward, if we are able to mop up 2-3 more assets in this Q4, the numbers may be going to be crossing 80,000 crore or something like that. So far as our disbursement is concerned, as you know, we started with zero pipeline in the beginning of the FY. So 30,000 crore target that we had given to ourselves was a very tall target. I'm happy that by the end of Q3, we have done already around 22,000 crore. So that target remains intact, that we believe that by the end of the Q4 and end of the FY, we'll be crossing the bridge of 30,000 crore that we had given to ourselves.
All right. Hi, sir. Good morning and good to see you in as always. What about the AUM? The AUM, I think, is at around 4.7 lakh crore.
As you know, AUM, as you know, this time we had a leap ahead and we ended up at 4.75 lakh crore, which is all-time high for the company. And as I've spoken in the past also, going forward, because in diversification mode, we are getting a very good response. And going forward, every quarter, we believe that now that we have shown a very handsome jump from 4.6 lakh crore to 4.75 lakh crore, this AUM will be showing a quite rise in every quarter going ahead.
So give us a number, sir. Where do you see this number going? And tell us a little bit more about the diversification strategy. As you said, it's being accepted well. So how does the mix look like going ahead?
Oh, yes. So the mix, as we have already discussed, in the diversification mode, we are looking more on the assets on the railway ecosystem. Yes, nearly 3 to 5% of my total assets will, by the end of the year, will be from diversified mode. And next 5 years, we have set a plan that our mix should be something like 60-40. So 60% should be my mix from the pure Indian Railway business, and 40% of my assets would come out from the railway ecosystem. We had a very good exposure to Gencos and Transcos in power value chain. We are not looking for any discom assets. Next to that is we mopped up quite a few number of disbursements in railway ecosystem with our siblings like DFCCIL and many SPVs of the railways. Apart from that, we are having a very close coordination and discussions with port assets as well as the metro railway assets. Maybe 26-27 FY will be finding that apart from the big ticket assets in these areas, metros and urban transportation will be one of the mainstays where we'll be having a good forays. So overall, as you mentioned, and the guidance that we are giving to ourselves as well as to the interested investors, that going forward in next 5 years, we are looking forward to something around 30 to 40% of diversified kind of asset, where our margins will be 2 to 3x of what we get from the railways. So this 60-40 is something we are looking forward to, ensuring that everything is coming from the whole of government approach, government ecosystem, and we are very particular about looking for the assets who are fitting in our framework of zero NPA.
What will this mean for your net interest margins? Can you give us an indication of the NIM guidance for IRFC?
You see, Rima, already from 1.4 that we used to maintain last year, we are already in 1.5 overall. And going forward, I have been repeatedly saying that the new business on diversification mode, whatever we are getting, here the NIM is more than 2%, 2 to 2.5%. So if you add this to my static NIM of 1.4 that I get from the railway business, it is going to grow. This year, we should end up more than 1.5 for overall. And I believe that going forward, every year, we believe that 1.6, 1.7 and nearing to 2% when we have our nearly 40% of diversified asset in the portfolio will be there. So to give a indication to you, every year, this NIM is going to improve now for the fact that diversified business is going to stay in our kitty.
So when will you achieve 40%, that 60-40 diversification that you intend, which will help to get your NIMs to 2%? How long will it take?
Well, that target we have unveiled as 2030. So next 5 years, that is the target. And we are looking forward to, in fact, 20 potential customers in government ecosystem, each around 15,000 crore. So the roadmap for the company going ahead is that we should look forward to nearly 20 entities in the government ecosystem, having linkage with the railways, and around 15,000 crores should be their ticket size in 1 or 2 or 3 assets together. So going forward, if today I'm having a asset size of nearly 4.75 lakh crore, if you go on net basis, 2030 we are targeting that our mix should be 60-40 in this ratio.
I know you focus, sir, on reducing your dependence on Indian Railways, but can you tell us what is expected from the railway capex side? There is a union budget coming up. There is talk about a very large capex number. What have you heard and what does this mean for IRFC? And will you require additional capital to meet that?
So you see, Rima, now that we are not on single client mode business, so we are not very jittery or anxious about what is coming in the railway budget or the union budget. Yes, we remain the sole financing arm for Indian Railways, and as and when they require any extra budgetary resources, we are there. What I understand from the discussion that is going on is extra budgetary resources going forward, we may not only be directly by the railways. There is a lot of PPP kind of thing that is government is thinking of, and if there is PPP projections also in the railway ecosystem, we will be there to pitch in and see to it that whatever is required for the concessionaire entering into a concession agreement for long term with the Indian Railways, we are their financing partners. So overall, yes, one thing is very clear that the appetite and requirement of capex for Indian Railways is not going to be less than 2.5 lakh crore for years together, maybe 5 to 10 years. Now, this 2.5 lakh plus crore of capex, whether it is being spent directly by Indian Railway through government budgetary support, or it will require extra budgetary support from our side, or there will be PPP element, that is to be seen after the budget is announced. But rest be assured, in the whole mix of the things, whatever capex requirement is there over and above the government budgetary support to the Indian Railways, it is IRFC which is going to pitch in up.
Okay, thank you very much for that, Mr. Dubey, for joining in.